Hi, good morning. So today we are going to continue our series on US taxation and the concepts on it. We started with the credits. In the first video, we talked about the differences between refundable, non-refundable credits and the payments, the nature and the basic idea behind that. The second video, we talked about the bird's eye view of the Form 1040, in which we talk about general things, general headings. However, certain important aspects were talked about that. For example, why refundable credits are shown with the payments and not with non-refundable credits, why child tax credit has been separately shown other than the other non-refundable credits. These kind of concepts were discussed in part 1 and part 2 video. And now, today what we are going to do is we are going to talk about the calculation aspects and the provisions as per the US tax law, as per the IRS for two kind of credits. First is a non-refundable credit, that is the child tax credit, and the second is a refundable credit, that is the additional child tax credit. Right? So we'll try to cover both the topics about the provisions and the calculation on this video itself. Let's see how it goes about. And all the figures that are used here about the limits or the provisions are for the applicable for the tax year 2022. So if you are going to, the whole concepts will remain the same even for tax year or coming tax years, but the figure like for the exemption amount or the limit amount or the phase out amount, that has to be looked upon as per the tax year you are working upon. For example, if you talk about the limits, then in 2023 the limit of the maximum limit available as a credit will change due to the inflation, so you'll have to look forward for the limit or update yourself with the new limits as per the applicable tax year, right? So initially in this video what we are going to talk about is we are going to talk about child tax credit. You can see that, for example, I have written section 24 in front of child tax credit, but in front of additional child tax credit, I have not mentioned any kind of section. This is what we are going to talk about when we read about certain statutory aspects of these credits. That is the requirements which are to be fulfilled by a taxpayer to be eligible to claim these credits, right? So there are certain common mistakes which people do when they try to understand the idea behind the credit or the calculation aspects. So we'll talk about all these things in this video. This is the Form 1040, the flow of Form 1040. We are not going to discuss this. We have already discussed this in part 2 of the series. Here what we have to look is recall or to be aware of whatever. If you are old to the US taxes and you know about the Form 1040, then it's okay. But if you are new to it, then kindly look at the positioning of the non-refundable credit and the refundable credit. You can see that the non-refundable credit is positioned after gross tax liability. So this is non-refundable credit is allowed maximum up to the limit of gross tax liability. It cannot go beyond gross tax liability. And the refundable credits are included in payments. That is, the US government considers the refundable credit as a payment from your side. Even though you have not actually paid it, they consider it as a payment from your side. And therefore, if the refundable credits are over and above the net tax payable amount, then you are eligible for a refund. Just like if you have made an excess payment. The whole concept has been discussed in part 2 video. So kindly remember from here as a revision, remember the positioning of non-refundable credit and the refundable credit. That's it. Now, our first question is, let's try to understand the idea behind additional child tax credit first, because this is a common mistake people do, that they think that child tax credit and additional child tax credit are two different statutory provisions. That is, the IRS, the Internal Revenue Code, actually have two different sections or two different provisions for both these credits. Let's see what actually the status looks like in Internal Revenue Code. Internal Revenue Code has a chapter, subchapter A, in part 4 of which section 21 to section 54AA are discussed. This section talks about credit against tax, right? If we further look into it, section 21 to 26 talks about non-refundable personal credits, and section 31 to 37 talks about refundable credits, right? Now, not only you as a new person, but even people who are studying or teaching or they are into the profession also. Sometimes people think that the refundable credit, that is the additional child tax credit, since it is the refundable credit, it should be shown in section 31, 37. What actually happens is section 24A talks about child tax credit, and then section 24D actually talks about certain refundable portion of this child tax credit, basically it's unused child tax credit. So certain refundable portion of the unused child tax credit that is allowed as a refund to the taxpayer. So practically, I'm not able to find in Internal Revenue Code any section or any terminology which directly uses the phrase additional child tax credit, right? It is not mentioned anywhere in Internal Revenue Code. Maybe I was not able to find it. IRS in section 24D gives a methodology through which a taxpayer can find a certain amount of unused child tax credit that he can claim as a refundable credit. That's it. In common parlance, this amount is known as additional child tax credit. That is in common usage. However, this amount is added to all the other refundable credits and they are considered as payments to be set off from net tax liability of the taxpayer. That's it. Now let's talk about the statutory provisions that are required to be fulfilled by a taxpayer to be eligible to claim these credits. The first condition is the taxpayer should have a child who should be under 17 years of age by the end of the tax year, right? Relevant tax year. Now, this is a mistake which commonly people do, that they think that a married filing separately person is not eligible to claim these credits, but that is not the case. The five taxpayer status under US tax, that is single, head of household, MFS, MFJ, and QSS, qualified surviving spouse, they don't have to do anything with the claimability of these credits. That is to say, there is no condition. Any person filing under any individual person filing as any status for his return is eligible to claim these two credits. The basic conditions are is directly referred to other factors of the taxpayer. For example, the child against which the credit is being claimed should be under 17 years of age by the end of relevant tax year, and he should have a valid social security number, right? Then this credit is non-refundable, as we are being discussing from last even the first slide, right? And there is no earned income test for that particular taxpayer. That is to say, even if the taxpayer does not have any earned income, all his income is passive income, then too he is eligible to claim this child tax credit. This credit actually phases out. In the next slide, in next coming slides, we'll talk about the concept of phase out. For the time being, you should understand that by phase out, it means the credit reduces. Due to certain factor, the amount of credit that taxpayer is eligible for, it will reduce, i.e. the benefit will reduce, right? And the last point here, relevant point is the maximum child tax credit that can be availed by a taxpayer for each eligible child is $2,000, right? Notice here, it is eligible child. For example, the taxpayer has three children, but only two of them are under 17, and one of them have a valid social security number. Then only he will be eligible for 1 into 2000, that is $2,000 as child tax credit. It doesn't matter that he has another child who is under 17 years of age, because that child is not fulfilling the second condition of social security. So this is the point. So we'll talk about the phase out later in coming slides. Now talking about the additional child tax credit, you can see it is similar to child tax credit as far as three conditions are concerned: about the child under 17 and social security number, and about the phase out thing. The difference between additional child tax credit and the CTC is, first, that additional child tax credit is a refundable credit. Second, it has an earned income test. That is, if the taxpayer only have passive income, then he might be eligible for the child tax credit, but he won't be eligible for the refundable portion, that is for additional child tax credit, right? So that is a very important condition. Next, and the maximum additional child tax credit that a taxpayer can claim is $1,500 per eligible child. If you will notice, there are many conditions that are attached to additional child tax credit, right? You have a child condition, you have maximum limit condition, you have refundable condition because it is limited to the net tax liability. Then you have earned income tax condition, and that's why it becomes very complicated. In the coming slides, we'll also talk about the calculation aspects of these two, right? Now, we have to understand one thing, that whole of the amount of child tax credit is not allowed as a refund. The child tax credit has another condition, another limiting factor attached to it. That is, that the maximum amount that a taxpayer can claim as a refundable portion is limited to the unused portion of the child tax credit. We'll talk about the unused portion, the concept of unused portion with an example in coming slides. But this we have to remember, as soon as somebody asks about the additional child tax credit, the first thing that should come into your mind is that it depends upon the unused portion of child tax credit, right? So that's the idea. That are the statutory provisions and requirements when we talk about these two credits. Now, talking about Form 1040, let's take an example. To understand the unused portion concept and other concepts, let's work with an example. Let's say there is a taxpayer who has this income. This kind of adjustments are done so that he gets a AGI of $230,000, right? AGI, if you remember from part 2 video, at the start of the show, everything, many other things in the case of individual depend upon the AGI of that individual. So let's say he has an AGI of $230,000. The deductions are 12,950, so he gets a total income of $217,050, right? Now, due to this, the slab structure and the tax rate structure, he gets, let's say he get a total tax liability, a gross tax liability of $30,000, right? Now, there's a request. Kindly don't start calculating the tax liability as per the tax year on this 217,000. I've just taken an example, a random example. Let's say the tax liability is $30,000, right? Now, what happens is, let's say he has two eligible children. What do you mean by two eligible children? It simply means the maximum CTC he can take off is 2,000 into 2, that is $4,000. Now the question is, can he claim this $4,000 completely as a non-refundable credit from his gross tax liability? The answer is yes. Because he already has a gross tax liability of $30,000, he can definitely deduct or reduce the complete child tax credit of $4,000 from this $30,000, right? So he can claim full CTC as a non-refundable credit from this gross tax liability. Therefore, his net tax liability will be $26,000. Now the question is, what is the unused child tax credit? You can see because he was able to reduce the whole gross tax liability by the child tax credit of $4,000, it's clear that there is no unused portion of child tax credit. The whole child tax credit has been utilized to reduce the taxpayer's gross tax liability, and therefore there is no unused child tax credit. And since there is no unused child tax credit, the taxpayer is not eligible for any additional child tax credit. Coming to a second example, let's say same income, AGI, and all these deductions, and the final tax liability, the gross tax liability of this taxpayer is $3,000. The same condition, he has two eligible children, so he's eligible for a maximum of $4,000 as child tax credit. Can he claim the whole 4,000 as a non-refundable credit reduction from the 3,000 liability? No, he cannot, because non-refundable credit, because CTC is a non-refundable credit, and non-refundable credit by nature has a restriction that it cannot exceed the base amount. Here the base amount is gross tax liability. Therefore, the maximum CTC he can claim is $3,000. Therefore, his net tax liability is zero. Now the question arises again, what is our unused child tax credit? You can see the maximum available was $4,000, but he was able to utilize only $3,000. Therefore, the available unused child tax credit, which he was not able to utilize, is $1,000. But the question is he eligible for complete $1,000 refund? No, the answer is not. You cannot straight away here say that the taxpayer is eligible for a $1,000 refund, because there are several other limiting factors that are attached to additional child tax credit, and a proper calculation has to be done to find out the maximum amount that the taxpayer is eligible for as a refund against additional child tax credit, right? So 1,000 is one of our limiting factor. The another limiting factor is $1,500, as we discussed in the previous slide. The additional child tax credit has an upper limit of $1,500. Now you have a second limit, $1,000. Then you have a third limit, the phase out limits. Then you have earned income test. So these are several factors that have to be looked upon before deciding on the amount, exact amount that a taxpayer will be eligible to claim as a refund, right? Now, so far talking about the provisions of the theory of the child tax credit and the additional child tax credit, The key points are there are these two don't have any separate statutory backing. CTC and ACTC are mentioned and are provided for in the same section, section 24, though in different parts. Then you have the key line that you have to remember for ACTC is it is a refundable portion of unused child tax credit. These three words hold the these three words hold the whole context, the whole meaning for the ACTC. Refundable, it's a portion, and plus it is of the unused portion of the child tax credit, right? So if this is a child tax credit, this will be your unused child tax credit, and this may or this can be your refundable ACTC, right? So here we end with the theoretical or the statutory provisions of these two credits. Now, talking about where are the sources, where are the calculation mentioned for these credits? These credits and the calculation aspects are mentioned first in Schedule 8812. If you go through Schedule 8812, it completely in detail talks about how to calculate and what information are to be taken to calculate first the child tax credit and then the additional child tax credit. After this, we'll have to look upon the worksheet given by RS, the worksheet named as Credit Limit Worksheet A. What this Credit Limit Worksheet A do is, it talks about certain calculations and setting up the priority of the non-refundable credits so that the amount that will be matched up with the child tax credit, right? It will be calculated. So it talks about certain calculation and certain flow of it along with certain priorities given to some credits after which child tax credit comes into picture. We'll talk about this worksheet also while calculating the credits. And the third information comes from credit limit worksheet. It is another worksheet, another calculation given by IRS. We won't be looking at this worksheet for the time being because 95% of the things will be solved in the first and the second source. The third source is specifically for those taxpayers who have three or more children. So some other conditions also come into picture and things become more complicated. So we are not going to talk about this third source for the calculation of these two credits. So we can say that we are going to calculate everything for the taxpayers who have less than 3 children, right? Now, talking about in next 6 slides, we are going to discuss 10 steps, right? So in first 4 slides, the 6 steps will cover calculation of child tax credit. And in next 2 slides, the 4 steps will cover the calculation of ACTC, right? Additional child tax credit. Before we go ahead, let's talk about the concept of the phase out, right? Now, what is the universal income tax principle or doctrine which is followed by all governments everywhere when they decide upon the taxability on income, right? The common principle which is followed is higher is your income, the lesser is the benefit, right? Thus, higher are the taxes on that particular person. This is the common principle. Just remember this principle. And as we know, the credits are actually the benefits for a particular taxpayer. It simply means that if a taxpayer has higher income beyond a threshold limit, then his benefits, his eligibility for a particular benefit or credit will start reducing. And at a certain point of time, this benefit will become zero, right? That is the common meaning of phase out. So phase out actually means the reduction of benefit due to rise in income beyond a particular threshold limit. That's it, nothing else, right? So wherever in US tax you read about or you talk about, there are things which are talking about phase out. It simply means reduction of benefits due to rise in income. That's it. Now let's talk about the calculation aspects. So the first thing which you'll have to look into is Schedule 8812. In this, the first step towards calculation of this credit is first to find the maximum available child tax credit for a particular taxpayer. And for that, we need the eligible children which the taxpayer has. So let's say in our example, the taxpayer has two eligible children. So the maximum child tax credit that is available for this taxpayer is $4,000, right? Next, what we do is we find out the phase out of above limit, right? The reduction of above benefit for this particular taxpayer. And since we have seen in last slide that the reduction is based upon income, if the income goes beyond a particular threshold limit, the reduction will phase out. So the income, the figure which we will have to look here is the AGR, right? The adjusted gross income of the taxpayer, the line 11 item of form 1040, the star of the show, the AGR. So if let's say the AGR, again, AGI is one factor and filing status is other factor. So if the taxpayer is filing his return under the status married filing jointly, the threshold limit is $400,000, and for other four filing status, the threshold limit is $200,000. Right? This is the AGI limit, right? After income and adjustments, right? Now, now we have to see that what is the phase out amount, what is the reduction amount. The law says that for every 1,000 increase, every $1,000 increase above these threshold limit of the AGI, the taxpayer's uh, credit available to the taxpayer will reduce by $50. You can say 5%, but the problem is if you say 5%, you might commit an error. For example, the taxpayer income increases by $900. So we'll calculate it by 5% of 900. That is not the case. You can see the point written is $1,000 or part. $1,000 or part. So even if the taxpayer's income increases by, let's say, $200 beyond these limits, still his credit availability will reduce by $50 flat. You can have a look at the example. Similarly, if the AGI of the taxpayer, of the MFJ taxpayer, is $401,100, you can see that the AGI exceeds completely by 1,000 first and then $100 for next 1,000. It's a part of next 1,000. So similarly, you will have $50 into 2, that is $100 reduction from the credit availability of the taxpayer. As simple as that, right? Now, so what we have done is part one and step two is first we have found out the maximum child tax credit available to the taxpayer depending upon the eligible children he has. In the second step, we have talked about the phase out amount. So we'll find out the net available maximum available credit to the taxpayer. In step three, what we do is we compare, we see whether the phase out amount is more than the available child tax credit in part one. Common sense. If yes, that is the phase out amount is more than the available child tax credit, then the answer is simple. Because the complete phase out, the complete child tax credit has phased out or has reduced, that simply means the taxpayer is not eligible for any child tax credit. The whole benefit is reduced. The taxpayer income is so high that he is not eligible for this benefit, right? And since he is not eligible for this benefit now, there is no question of ACTC. You cannot say that since he is not eligible for $2,000, it is unused. The question of unused will come when he will be eligible for certain amount. Here, because the whole child tax credit has phased out, he is not even eligible for the basic or the minimum amount, any minimum amount of child tax credit, right? Now, here one point we'll have to look into. What this is another mistake people do. When we talk about phase out, let's say there's a question, think over it. Let's say there is a taxpayer who has a filing status of MFJ, married filing jointly, and his AGI is $440,000, right? We see that the for MFJ taxpayer, the threshold limit is $400,000. Here we can see that his AGI exceeds the threshold limit by $40,000. Now 5% of $40,000, or you can say $1,000, $50 per 1,000. So $2,000 for $40,000 is the phase out amount. So does that mean that he is not eligible for any child tax credit? Because $2,000 is the maximum child tax credit availability per eligible child. So that's the mistake people do. The phase out amount is not calculated on per child basis. It is calculated on the aggregate availability of the child tax credit, right? So the taxpayer in our case has two children, $2,000 availability of CTC per child. That means the aggregate amount of child tax credit availability is $4,000. So in our this example, if the phase out amount is $2,000, then this 4,000 will reduce by 2,000 and the taxpayer will still be eligible for $2,000 as child tax. You need not phase out the tax credit amount for every child. So you won't say that $2,000 is the phase out amount, so the complete child tax credit has phased out for every child. That's a very wrong interpretation of the benefit, right? So this is the case where the phase out amount is more than the child tax credit, hence the taxpayer is not eligible for any child tax credit. But what happens if the phase out amount is less than child tax credit, right? If the phase out amount is less than the child tax credit, then we'll do a calculation, a simple calculation in step 4. That will be the maximum available child tax credit minus the phase out amount. In our case, 4,000 was the maximum available child tax credit. Phase out amount was $2,000. Therefore, the balance child tax credit will be $2,000, still remaining with the taxpayer that he can claim as a non-refundable credit, right? Let's see another condition. Right now, till now, it is the situation. Now, what happens is, see, we have done with the 4 steps. We talked about that there are 6 steps for calculating the available child tax credit. We are done with the 4 steps. Now, in 5th step, what we do is this you have to understand. This will actually broaden your horizon about the thinking of the how the benefits are normally calculated and how the government himself itself gives certain kind of benefit in the calculation aspects of these credits, right? So here in 5th step, what we will do is we'll go to the credit limit worksheet, right? What we will have to do is kindly focus, right, on this explanation. What we will have to do is we'll have to first find the balance gross tax liability, right? What do you mean by balance gross tax liability? First, we have to focus it's a gross tax liability and it's the balance amount, right? You will agree that the child tax credit is not the only non-refundable credit available to a taxpayer. There are several other different non-refundable credits that are available to the taxpayer. So we know that let's say the taxpayer has a particular gross tax liability, and what happens is before any other credit, before any other non-refundable credit, the taxpayer utilizes his child tax credit completely to reduce his gross tax liability. So what will happen is, uh, because he has completely utilized his child tax credit, now there is no unused child tax credit, and therefore he won't be eligible for any kind of refund. So what IRS did was that it formulated a certain calculation, right? It said that wait a minute, what you have to do is first you reduce your gross tax liability by all other non-refundable credits other than child tax credit, right? So what happens is this will do is that these are mentioned, all these non-refundable credits are mentioned in the credit limit worksheet A. You can Google it and you can find it out. So what this will do is due to the usage of or the utilization of all other non-refundable credits, already the gross tax liability will reduce to a certain extent, right? For example, I've tried to explain it with a simple example. Let's say the taxpayer's gross tax liability is $3,000 and other non-refundable credits, whatever are mentioned in worksheet A, are $2,200. So what will happen is, first you will reduce the $3,000 by $2,200. So you will have a balanced gross tax liability of $800. You can see the gross tax liability has reduced to $800. It's a very small amount. Now, this is a favorable treatment for the taxpayer. I think many of you can already understand this. That now, let's say, in our example, which we just did in previous slide, the balance child tax credit after phase out available to the taxpayer was $2,000. Now you can see when you compare this child tax credit, this non-refundable child tax credit of $2,000, it is more than $800. That means the taxpayer can maximum utilizes $800. The balance $1,200 of child tax credit will remain as unused. Therefore, the chances of taxpayer to claim a refund increases. I hope I was able to explain things in a simple way. Now you can yourself see that in case this calculation was not given by IRS, what would have happened is that the taxpayer might have utilized the complete $2,000 for reducing this $3,000. So his all child tax credit might have utilized or used up, so he won't be having any kind of other balance for refund, right? And the next loss which a taxpayer might have seen was that due to utilization of this $2,000, the balance gross tax liability would have been $1,000, and therefore he would have able to claim only $1,000 from other non-refundable credits, even though he was eligible for $2,200 as non-refundable credit. So there are two losses two drawbacks which would have happened to the taxpayer. First, he might not have got any refund, and second, he might have been able to only utilize a lesser portion of other non-refundable credits. But due to this calculation, he was able to utilize the full amount of the other non-refundable credits, plus now he is also eligible for certain refundable portion of the child tax credit. So this becomes a very taxpayer friendly, a favorable treatment for the taxpayer, and this has to be looked upon while calculating the tax liability. The final step in calculating the final eligible child tax credit for a taxpayer is very simple. What you have to do is you have to just compare the net available child tax credit after the phase out amount as calculated in step 4 with the balance gross tax liability as calculated in step 5, right, through credit limit worksheet A. And with our example, you can see that in step 4, our balance child tax credit after phase out was $2,000. Our balance gross tax liability was $800, and we know the smaller of this is allowed as child tax, right? So gross tax liability $3,000. What we did was we reduced the other non-refundable credits $2,200. Then we reduced the available child tax credit, which because of step 6 will come out to $800. So your net tax liability will reduce down to 0, right? Now here only the things complete here. The calculation for child tax credit completes here, but just for an extra um, knowledge before we move ahead for additional child tax credit, what is the unused child tax credit amount? Simple. $2,000 was the available, 800 was what we used up, so the unused child tax credit is $1,200. Now, this is another benchmark to calculate the additional child tax credit, right? Moving on to the calculation of additional child tax credit, right? And next two slides, I think, we'll be talking about 4 steps for calculating this. First, the very first condition that you have to ask yourself before even before even calculating or going ahead with the additional child tax credit, whether the taxpayer has earned income more than $2,500. As simple as that. If the taxpayer has only passive income or has earned income equal to or less than $2,500, then he is not eligible for any additional child tax credit. So if his earned income is not more than $2,500, then he is not eligible for any additional child tax credit, right? And if yes, then what we have to do is we have to compare the balance gross tax liability that we calculated in step 5, right? Is it more than the available child tax credit as calculated in step 4 after the phase out amount, right? Is it more than that? If it is yes, that means the balance gross tax liability, even after utilizing all the other non-refundable credit, was more than the available child tax credit. What do you mean by it? It simply means that the taxpayer was able to consume whole of child tax credit, available child tax credit. Therefore, there was no unused child tax credit. Therefore, if the answer is yes to this comparison, then you don't have any unused child tax credit, and consequently, you won't be eligible for any additional child tax. But if the answer is no, like we did in the last slide, the last part of the slide, let's say if there is unused child tax credit, in our example, the unused child tax credit was $1,200, then what you have to do is you simply have to calculate this unused portion, which we did for understanding. We did in the past slide. So in our example, $2,000 was your available child tax credit, $800 was your balance gross tax liability after all other non-refundable credits, and therefore the unused portion of child tax credit is $1,200. So in this step, in step number 7, we calculate whether the taxpayer has any earned income. If he has, but if he has any earned income more than $2,500, if yes, then we'll talk about the unused child tax credit. If no, then no further calculation. The taxpayer is not eligible for any refundable portion. That's it. So now, when we have calculated the unused child tax portion, we move on to the next step. That is, we calculate the eligible additional child tax credit. That is again the smaller of. That is, we knew that when we were talking about the provisions and the theory of the credits, we see that the maximum limit which is allowed as additional child tax credit is $1,500 per eligible child. Therefore, the maximum in our case, the maximum amount that a taxpayer can claim as additional child tax credit refund is 1,500 into 2, that is $3,000. But we know that the unused child tax credit, as in step 7, what we just calculated, is $1,200. So even though by statute, the maximum amount is $1,500, but the another limiting factor is unused child tax credit, that is $1,200. Therefore, the maximum eligible child tax credit as a refundable portion is $1,200. If you see, we are reducing down, because of other limiting factors, the maximum availability or eligibility for this credit as refund is reducing down. Now, coming on to step number 9, what we do is we calculate the earned income limit of the taxpayer. As we know that anyhow up till $2,500, the taxpayer is not eligible for any additional child tax credit. This is the earned income limit. So definitely, by common sense, only if the taxpayer has earned income more than $2,500, he'll be eligible for a ACTC refund, right? So here the formula is you have to calculate 15% of the earned income, which is over and above $2,500, right? This 15% is another limiting factor. So for example, let's say this taxpayer has earned income of $3,000. So if he has earned income of $3,000, he is eligible for a CTC refund, but the maximum limit that he can avail of as a CTC refund is 15% multiply 15% of 3,000 minus 2,500, that is $75. Right? This is another limiting factor. And when we talk about the limiting factor, by definition, it means that this is the maximum limit if compared to other factors. Now talking about the final step, what we do is we calculate the final available additional child tax credit, and the first question we ask is, does the taxpayer have less than 3 children? If the answer is yes and no, let's talk about no first. If the answer is no, that means if 3 or more children, then you will have to further go ahead and calculate things as per credit limit worksheet B with other factors and other conditions. We are not going to talk about that. But if the answer is yes, if the taxpayer has less than 3 children, right, what you have to do is you have to simply see the smaller of the amount that we calculated in step 8 and step 9. So step 8 says that due to the maximum amount condition and the unused condition, the maximum refund you can claim is $1,200. But the step 9 says due to earned income test condition, the maximum amount that you can claim is $75. Therefore, the smaller of this amount, that is the maximum additional child tax credit refund this particular taxpayer can claim is $75. This is not so disheartening because the figures I have taken are random just to explain the principle. The reality might be different, right? Taxpayer might be eligible for, let's say, $1,000 refund. That's a different scenario. So let's not get disheartened by this. And this was all about the child tax credit, additional child tax credit. I really hope that you have learned something new because as a student, I have gone through different classes and different coaching notes and centers. I have shifted 6 institutes and 4 or 5 study materials, and I have never found this kind of explanation, even 25% of this explanation for calculation of these two credits. So I really hope you learn something new. And guys, this is how the cookie crumbles. All right? Thank you.